Good morning, good morning, good morning. It is a very cold Thursday, the 19th of February, all day. This is the morning blast for myself and Mr. Michael Brown. As usual, you join us for a very candid take on markets. We do not apologize for swearing and ranting, etc. I am feeling like utter shit this morning for some reason. Nothing discussed on this podcast is trader investment advice. Yada, yada, yada. Michael, how are
Oh, very good morning to you, Ryan. Good morning, everyone. I'm all right, actually. I'm feeling quite sprightly this morning, but I
Oh,
shan't rub that in. What I will say is I agree with you. It is absolutely freezing
Baltic.
outside. I think I was a little bit ambitious leaving the jacket at home and going with just a gilet, and then my truck
Oh,
was
do you know
late, and
what?
that was not fun.
Oh, I swear to God, I was about to say, I bet you're wearing a gilet.
Oh, naturally, mate.
Oh,
It's part of the uniform, isn't it?
well, for you, maybe.
I'm also, although just to clarify, sartorial standards have fallen because I'm also in trainers today. So,
Oh, well, in that case, I might have to come to the city later on to see you.
well, just to take a picture.
Yeah, I mean, I'm feeling like absolute death, but I will come over just to see you wearing a gilet and trainers. But anyway,
Enough of that.
moving swiftly on, a market update from our good friend Clive Lambert at Futures Techs. What did happen yesterday? S&P held that 68 to 45 level that we've been watching for a little while. They rallied up to 69.25. DAX, the German DAX, retook the gap at 25,322. That's been weighing for a little while. Eurostoxx 50 and FTSE futures both made again new all-time highs, and the FTSE called small up. Obviously, that was when Clive started putting this out about an hour or so ago. Start the day with fresh highs. Bund futures can't seem to see off the 129.32 level that we've been talking about for a little while. Been highlighting that for a good few days now. Well, maybe a week or so. So maybe sellers returning from there. Forex markets cable saw red again, as did the dollar. Well, the euro dollar, sorry, now eyeing support at 117.66. Dollar yen rallied away from support at 152.00. Gold, the yellow metal, and silver both. So I can't say gold without having to say the yellow metal. Gold and silver both posted green days. Silver has bid again overnight, so might have another go at the Fibonacci resistance level. It's 82.14 and then 84.74. On the London Metal Exchange, copper rallied. Hey, finally, to put some distance on the key supports, maybe averting the threat of giving sell signals. Aluminium continues to hold uptrend support. This line is now at 3,027. In the oil space, Brent and WTI crude both saw strong gains yesterday. Obviously, a lot of chatter about potential war in the Middle East, etc. Brent getting back up to 70.72 as Clive went to print, breaking higher to print levels last seen on the front month back in August of last year. 72.74 to 83 is the next strong resistance to gun for. The European natural gas TTF posted big green candle yesterday with bullish engulfing pattern. It's bid again in early trade this morning, strongly hinting that the recent weakness is over. 33.29 is the resistance to watch on further gains. EU carbon saw a green day for once. Obviously, that's been in the gutter of the last few sessions thanks to Germany's MERS, but nothing trend changing on that one. So we stick with the bears. And finally, from Clive, wheat markets over in the US, the ginger stepchild of agricultural markets, had a good day for once in ag space. 548 is now the Marabou's support above 558.6. We could gun for 573 to 576.4. There you go.
Very good. Thank you, Ryan. Thank you to Clive as well, who sources say is a very generous lover. But the less said about that one, the better, I think. You mentioned.
I just want to go back to bed. I'm feeling so ill.
So does he, for different reasons.
Like, carry on.
Please,
Quick.
tell me this.
I'm going to have to mute myself 1 second.
Oh, God. Oh, dear. Right. Where the hell are we? I don't even know where to start this morning after that. Let's go with geopolitics, because crude was really the biggest mover on the day yesterday. Brent and WTI rallying 4 or 5% apiece. It must be said that there's nothing really concrete in terms of the fresh developments regarding the situation in the Middle East, but there has been a lot of sources reporting, just more in the vein of what we've had recently, to be honest with you, that the US is getting closer and closer to military action in the Middle East. The Wall Street Journal have done a bit of maths, and they've worked out that actually all of the air power that is in the Middle East is actually now the greatest amount since the 2003 invasion of Iraq. The CNN, the Wall Street Journal, and Axios, among others.
It was the Axios, I think the Axios post, which got a lot of...
They went first. Yeah. All of this was very much along the lines of the general vibe is Trump is being briefed on military options for making a strike on Iran, potentially as soon as this weekend, but that no final decision has yet been made. As Ryan rightly says, Axios had that first, then the Wall Street Journal, then CNN, and now kind of every man and his dog is running with that news. This is all via aides and sources and people familiar with the matter, etc., etc., etc. I don't think it should come as a massive surprise to anyone unless you've been living under a rock. We all know that the US has been moving a hell of a lot of military equipment into the region. They've sent an aircraft carrier halfway around the world to bolster forces in the Middle East, and that movement of military material is continuing. So I don't think it's particularly shocking that these options are being discussed in the White House and in the Pentagon. But it does feel as if we are getting closer to the point where, Trump has to either say, yes, we're going to strike, or no, we're not. We've made a deal with the Iranians. When that point is, sadly, I don't know, because I don't have a crystal ball. But it's not particularly surprising to see markets, particularly crude, of course, pricing a greater degree of geopolitical risk premium on the back of that. Although, as we so often say, just because a missile is launched in the Middle East, it does not mean that Brent is going to $100 a barrel.
Right.
It is absolutely far from how
and
this
who
works.
wrote quite a decent article on this?
Was it a vertically challenged bloke with 25 years of experience in markets who used to market make crude a bit?
A very sexy vertically challenged oil trader.
Oh, so you've got a twin, have you?
Well, yeah.
Fuck, that doesn't work. Fucking moron. Honestly, me thinking about Clive being a lover has just completely thrown me this morning, honestly. Oh, God. Anyway, we will continue to watch what happens on the geopolitical front. The other thing to bear in mind here is, of course, and this is not a kind of hard and fast rule, but a number of the military actions that Trump has carried out recently, particularly the Maduro capture in Venezuela, happened over the weekend. So, of course, a lot of people are kind of putting two and two together and saying, oh, does it mean that this weekend is the one where they go for it? Again, I don't know for definite, but the sources reporting definitely leans towards something happening potentially sooner rather than later.
Rule of thumb is always you never should be short crude over the weekend because you never know what's going to happen.
Yeah, definitely not this weekend.
I'm not saying being long over the weekend, but definitely don't be short.
Yeah, absolutely. I think that's very sage advice. In terms of other bits and bobs from yesterday, we did get minutes from the January FOMC meeting. A lot of the commentary in the minutes was pretty much as you would expect, with almost all policymakers supporting holding rates steady. Several policymakers said that some further cuts could be appropriate. There was a line in there that some people have got very overexcited about, saying, and I quote here, several favoured two-sided forward guidance on policy, noting that upward adjustments could be possible if inflation remains above target. A fair few people are now kind of putting two and two together and going, oh, that means the Fed are going to hike. It really doesn't, guys. We know that this actually feeds nicely back into the discussion we had yesterday. We know that there are some more hawkish members on the FOMC, particularly in the non-voting contingent. If you have no idea what I'm on about, go and listen to yesterday's Morning Blast after you finish listening to this one. And we know that there are some hawks there there who are worried about upside inflation risks. Just because they raised that at the FOMC meeting as part of their policy deliberations, it does not mean that the Fed's next move is going to be a hike. In fact, as I put in my morning note this morning, I think there's more chance of pigs flying than the Fed's next move being a rate hike, given where the labour market is, given where the inflation backdrop is, and also given that Kevin Walsh is coming in. And of course, he is not going to come in at his first meeting and go, you know what, lads, should we hike rates? Because I think Trump will probably sack him straight away, or at least try to. So ignore the hyperbole on that one. We also had a fair bit of US data yesterday. Durable goods orders fell by 1.4% in December, which was marginally better than the 2% decline that had been expected. We also had housing starts, building permits for December. They came in at 1.4 and 1.45 million respectively. Don't have any priors to compare that to because the November data fell victim to the government shutdown. And we also got the latest industrial production stats, with production having risen by 0.7% on the month in January, almost double the 0.4% increase that we saw in December, with 0.4% having also been the consensus for that figure. The US also sold 20-year Treasury bonds yesterday, $16 billion worth, sold with a tail of 2 basis points. Again, at face value, that looks a little bit ugly, if we're being completely honest. But the 20-year, as we said yesterday, is by far and away the most unloved segment of the Treasury curve.
Like wheat is the agricultural markets, the 20-year is the ginger stepchild of the Treasury yield curve.
Exactly that. So do not read too much into, and certainly do not try and overinterpret there is no signal in that Treasury auction result, basically. It's at the point where even the chap who came up with the 20-year Treasury bond, Steve Mnuchin, great looking man, even he has come out and said, actually, I regret doing that and maybe we should stop issuing them, which kind of says all you need to know. Just a couple of other bits and bobs before we move on. The Japanese PM was on Newswise yesterday. She met with Bank of Japan Governor Ueda on Monday and did not make any comment as to what they spoke about. You would imagine that they discussed monetary policy. She's not exactly just inviting round for tea and biscuits, but there we go. Then they're keeping their mouths shut in terms of what they did actually discuss. And also just in the tech space, OpenAI, they are reportedly, according to Bloomberg, citing sources, close to finalizing a $100 billion funding round. This could value the company at more than $850 billion. I think the current valuation is about $700 billion. This, again, kind of feeds back into something that we've been saying for quite a while now, and Ryan, I think, was actually first to point this out, which is that all of these AI techie type companies almost need to keep good news stories doing the rounds in order to basically keep the frenzy going and to prop up their valuations. And I think this is another one of those good news stories. Although do bear in mind that this is going to do absolutely nothing in order to sort of allay concerns around the circular nature of all of this AI financing, because some of the biggest investors in this funding round include Amazon, Nvidia, and Microsoft. Who do OpenAI buy stuff from? Well, I just named the 3 companies. So again, that is not going to soothe any nerves on that front, but it just keeps that sort of steady drip, drip, drip of good news coming for the hyperscalers.
Exactly that. And we're not having little rants today because, 1, we couldn't think of a topic, and 2, I feel like shit. So what else have we got to look forward to today?
Well, indeed. I mean, if any listeners do have anything in particular they want us to discuss, do let us know. We can get to that tomorrow.
And honestly, it doesn't have to be market related. Happy to talk about anything else other than the Arsenal.
Oh, God, honestly.
Do you know what I was thinking of last night when I was watching it? You remember that 80-year-old Millwall guy that we spoke to in the pub?
Oh, yeah. He did say this would happen, didn't he?
Well, no, I said it would happen. But anyway, right, moving swiftly on.
I must admit, I did go to bed quite early last night. We were 2-0 up when I went to bed. I thought, that's fine. It's Wolves. They're bottom of the league. Woke up and it's 2-2. Woke up this morning and the result was 2-2. I'm like, oh, for fuck's sake. Yeah. Here we go again.
It's not looking good. But what have we, apart from maybe me seeing you in the pub later on, and you give me a little bit of a cuddle because I'm not feeling very well. What else have we got to look forward to?
I had to do that on Saturday.
Well, to be fair, you did give me a cuddle. But anyway,
I didn't have a choice. You just fell into my arms.
All right,
some sort of
moving swiftly on. Moving swiftly on.
Sure. Right. The day ahead, what do we
Please.
have coming up? Nothing this morning out of
That's
Europe.
the end
The
of the
data
show.
docket is very, very empty. We do have a few bits and bobs on the US calendar, though. At 1:30 this afternoon, we get the weekly jobless claims figures. Initial claims seen at 225,000 in the week to the 14th of Feb. That would be modestly, very modestly down on the 227,000 that we saw previously. Continuing claims expected to have held steady at 1.86 million. Do bear in mind that the initial claims print, that does pertain to the February non-farm payrolls survey week. So do just bear that one in mind. Also at 1:30, we get the latest manufacturing numbers from the Philadelphia Fed. That index expected at 7.8 in February, down from 12.6 in January. Also on the docket this afternoon, we have consumer confidence data out of the Eurozone and January's pending home sales stats in the US. Both of those figures are due at 3:00 this afternoon, London time. Besides that, we've got a busy calendar of central bank speakers, including the ECB Vice President de Guindos and Cipollone, another exec board member. And from the Fed, we have Goolsbee, Kashkari, Bowman, and Bostic all speaking throughout the day. You can completely and utterly ignore everything that Atlanta Fed President Bostic says for the simple reason that next Friday is his last day in the job before he retires. So he has no impact on what happens with policy moving forwards. And last but by no means least, on the earnings front, we do hear from Walmart before the market open. They will be of interest, not only given that they reached a $1 trillion market cap recently, but also because they are a barometer of consumer spending at large. So can tell us a little bit more around what's going on in the US economy. And of course, just very, very lastly, I promise this time, continuing to monitor any incoming geopolitical developments given the simmering tensions in the Middle East, which, well, don't seem to be showing any sign of subsiding anytime soon.
Yeah, exactly that. And obviously use PIQ Suite to keep up to date with all of that geopolitical nonsense.
Indeed.
Michael, thank you so much. Apparently Clive is just WhatsApp me, said he would volunteer to give me a cuddle later on if I do come into town.
Thank you, Clive, taking one for the team there.
Right.
That's a very circular nature to this show, actually.
I'm going to go and mainline some Lemsit and hopefully feel a bit better.
I'm glad you said Lemsit.
Well, right, moving swiftly on. Michael, thank you very much. Listeners, thank you so much as always. Hopefully we've made some sense today. I'm not sure we have. Yeah, we'll see you all tomorrow. Much love.
Bye.